Welcome to the channel. I am James, and today we are looking at Apple Inc. ticker symbol AAPL. They released their most recent quarter earnings last week. We're going to be going through those numbers today. Then we're going to be looking at my discounted free cash flow model and my Buffett Graham intrinsic value models. We're going to be putting these latest numbers in here and seeing if this stock is still a buy in 2022. So firstly, what is happening with Apple's share price? Well, it's currently at $155.57 a share, down 1.3% on the day. If we go to the year to date, Apple has been absolutely hammered, down 14.5%, but over the last year it is up 17%. So if we compare this with the S&P 500, you can see that over the last year it's beat the market. Over the last year to date, it is pretty neck and neck, but actually slightly more of a decrease. But if we go over the last 5 years, Apple has gone up over 317% and the market only 71%. So Apple has consistently beat the market over time. And is it going to continue? Well, let's have a look today. One thing I want to look at quickly is this is a news article based on Berkshire Hathaway's latest earnings. This was released on Saturday. Warren Buffett's Berkshire Hathaway boosted its Apple stake in the first quarter. Warren Buffett's Berkshire Hathaway boosted its Apple stake in the first quarter. Buffett confirmed the additional purchases during the shareholder meeting, and the total stake of Apple in Berkshire is $159 billion. So Warren Buffett has been buying up Apple. And you can see here in the news as well, Buffett would have bought more last quarter, and he says he would have added more if they rebounded. So Buffett was buying, probably will continue buying, but should you buy? That's the question. Before, can you please give a like on the video? It really helps me out. Subscribe if you're not already, because we're going to be bringing out more and more of these videos. And yeah, thanks for watching. So let's get straight into it. Firstly, we have a little bit of a press release here. Apple reports second quarter results. Revenue up 9%, March quarter record high. Services revenue reaches all-time high. We'll be talking about that in a second. But they have revenue up to $97 billion, up 9%, and earnings per share of $1.52. Some quotes from Tim Cook won't be going in, but you can see here all-time record for services and March quarter records for iPhone, Mac wearables, etc. Also, the dividend, 23 cents a share, increase of 5%, and this is payable on May the 12th. And if you own the shares on May the 9th, you will get them. And they authorized a $90 billion share repurchase program, so that's massive for investors. So let's get straight into it. We have the 3 months ended and the 6 months ended. Let's have a look at the net sales first. So it was previously 89 billion, and that is up to 97. So that is obviously increasing. How is this split up between products and services? 72 billion and 16, and that is up to 77 and 19. So both are increasing. Where does the services come from? Well, you can see here, this is the net sales by category. This is on the product and services side. iPhone still is the massive driver, 47.9 billion to 50.5. iMac up 9 to 10. iPad actually down slightly. Wearables up and services up. So overall, that gives us 89 billion and 97 billion for the quarters. So if we go to the Yahoo Finance, it does update it because it has included the trailing 12 months, but you can see it has increased 256, 260, 247, 365 billion, and is now at 386 billion. So revenue is still steadily increasing for Apple, which is excellent to see. Next, we want to be looking at the net income. How do we get that? Well, we take net sales revenue minus cost of sales, not operating expenses, and we minus that out. If we look at the cost of sales, up slightly, 51 billion to 54 billion, but it has increased by more than, about 8 billion, so that is still on the upside. But you can see the massive cost of the products, 46 billion to 45 billion, compared to the sales of 72 and 77. Services, 5 billion, 5.4. They're making over 3 and 4 times the amount from the services, which just shows why this is a very, very important sector for Apple that they need to continue growing. Well, what does that mean on the bottom line? 23 billion in the previous year's quarter, and now that is up to 25. So that is going up. And if we look at the net income, once again, net income as at all-time highs, 101 billion, up from 94, 57, 55, and 59. So these are record-breaking years for Apple in terms of profit. Next, we're going to be looking at the shares outstanding, or Apple buying back their shares. And you can see here, well, when we talked in the first part, they are going to do a 90 billion shares repurchase program. But in the meantime, they are still buying back their shares. 16.9 billion down to 16.4. What does that mean for a shareholder? Well, if you owned one share of Apple and there was only 10 shares, you would own 10% of the company. If Apple then did a buyback program, bought back 5 shares, there would only be 5 shares of Apple, you would still have 1 and you would own 20% of the company. So it rewards shareholders, and especially if they think their stock is undervalued at the minute, which they will be buying it because they think, well, it's going to go up, so let's buy it now while it's cheap. So Apple, that is good news for investors because they do think it's cheaper. Next, we want to look at the free cash flow. Well, how do we get free cash flow? Cash from operating activities minus capital expenditures. This is on the 6 months here, 6 months ended 21 and 22. What is the cash flow from operating activities? Well, it's gone from 62.7 billion to 75, so that is on the up. And then we look at the CapEx, which is capital expenditures, and it's payments for property, plant, and equipment. 5.7 billion, 5.3 billion. So that is actually down. So what does that give us in terms of free cash flow? Well, luckily, Yahoo Finance does actually work it out because it's been a couple of days. We'll see that the free cash flow on the annual is 105 billion. So that is once again all-time highs, increased from 92 billion the previous year, 97, 58, and 64. So everything is trending up, almost 100 billion in free cash flow for Apple. So that it leads us very nicely onto our discounted free cash flow models. So what does this do? Well, we've calculated the future free cash flows on Apple, discount them to today's value, and this gives us a fair value of the stock. Let's take a look at the first numbers, and that actually has Apple calculated at $183 a share, which means it's trading at a 17% discount. So straight away, discounted free cash flow model is saying this is a buy. 24 free cash flow ratio, which is very low for this type of company. But if you look at the numbers here, this is actually speculating that in 2023, the number will go down because of the averages. So let's just say that 2023 is a record year. Apple has been consistently, although 2021 and 22 has increased dramatically. Let's just say that we can increase on sort of the net income margins here, the more recent ones, because of the service increasing. An average of them is 26%. Why am I increasing this to 26%? Well, because they're making money from more services, and services have a higher income margin because the sales are lower. And what is that? Well, this is if they got to 113 billion in 2023. This would place the stock at $200 a share, 30% discount. I think this is probably a bit closer to what it is worth based on these calculations. And finally, we have the Buffett-Graham intrinsic value. Does Warren Buffett think it's a buy? Well, the answer is yes. So I'm going to say that this will be green. Let's have a look. Give a like if you think it's green. It will be green. There you go. Interesting enough, it is at a slight discount, $158.99 a share. But Warren Buffett did say it was a buy. And if we go back to what he said, well, he would have added more if the stock didn't rebound. So he was probably buying in the quarter $150 a share. And it is up 3% on then, so definitely was a purchase in his mind, and looks like it's a buy right now. So both of the models are saying it's a buy. Company is producing all-time records, record highs in terms of revenue, profit, and free cash flow. They're buying back their shares. They're increasing their most profitable sector, which is services. And to be honest, this company just keeps on going from strength to strength. Right, guys, thanks for watching. Please give a like on the video if you've enjoyed it. Subscribe if you're not already, and I'll catch you guys next time.